see.
My wife is fighting with Apple right now.
Gents all set? All right. Good morning, everybody. I'd like to call this meeting on the Standing Committee on the Alberta Heritage Savings Trust Fund to order and welcome everyone in attendance. My name's Tanya. I'm the MLA for Fort McMurray Wood Buffalo and chair of this committee. I'd ask that members and guests at the table introduce themselves for the record, and I'll call on those joining by video conference. We shall begin to my right.
Garth Rosal, MLA, Vermilion, Leigh-Minster, Wainwright.
Justin Wright, MLA for the charming constituency of Cypress Medicine.
Ron Weeb, MLA, Grand Prairie, Wapiti.
Justin Lord, AIMCO.
Amit Prakash, Chief Fiduciary Management Officer, AIMCO.
Stephen Thompson, Treasury Board and Finance.
Brittany Jones, Treasury Board and Finance.
Tim Lam, Auditor General's Office.
Nathan Ip, MLA for Edmonton Southwest.
Kyle Kozowski from Sherwood Park, adjacent to the Heartland Industrial area, which is the economic driver of this economy.
Gurinder Brar, MLA from Calgary Northeast.
Christina Steenbergen, LAO Communications.
Good morning, everyone. Nancy Robert, Clerk of Journals and Committees.
Good morning. Warren Huffman, Committee Clerk.
And now we shall go to those online. Mr. Steffen, will you start us off, please? And please remember to turn on your cameras.
Good morning, everyone. Jason Steffen.
Sir, Mr. Boychenko.
Andrew Boychenko, MLA for Drayton Valley, Devon.
Thank you, sir. With that, for the record, I will also note the following substitutions. We have Mr. Ip for Member Kayonde. We have a few housekeeping items to address before we turn to the business at hand. Please note that the microphones are operated by the Hansard staff. Committee proceedings are live streamed on the internet and broadcast on Alberta Assembly TV. The audio and video stream and transcripts of meetings can be accessed via the Legislative Assembly website. Those participating by video conference are encouraged to please turn on your camera while speaking, mute your microphone when not speaking. Members participating remotely who wish to be placed on the speakers list are asked to message the committee clerk, and those in the room should signal the chair or the committee clerk. And please set your cell phones and other devices to silent for the duration of the meeting. And with that, we will start off with the draft agenda, which was made available to all members. Does anyone have any changes or additions to make to the draft agenda? If not, I will ask that someone move that. Mr. Wright moves that the Standing Committee on the Alberta Heritage Savings Trust Fund approve the proposed agenda as distributed for its April 14th, 2025 meeting. Any discussion on this? With that, we'll just go to vote. All in favor of? Please say aye. Anyone opposed in the room or on the phones? I see none. That motion is carried. Thank you so much. All right, next we have the draft minutes from our February 6, 2025 meeting. Do members have any errors or omissions to note? If not, would someone like to move that, Mr. Kozowski moves that the Standing Committee on the Alberta Heritage Savings Trust Fund approve the minutes as distributed of its meeting held on February 6, 2025. Any discussion on this motion? That said, all in the room, all in favor of, please say aye. And opposed? I hear none. On the phones, anyone opposed? No. All right, that motion is carried. Thank you so much. The Alberta Heritage Savings Trust Fund third quarter report for 2024-2025 was released on February 27, 2025. Members were notified when the report was posted to the committee's internal website. As committee members will be aware, the Alberta Heritage Savings Trust Fund Act mandates that one of the functions of this committee is to receive and review quarterly reports on the operations and results of the Heritage Fund. We are pleased to have representatives from AIMCO and Treasury Board and Finance here to provide us with an overview of the report and answer any questions members may have. I shall turn the floor over to the AIMCO and Treasury Board and Finance. Please begin when you're ready. Mr. Thompson.
Thank you, Mr. Chair. Good morning, Mr. Chair, committee members, and treasured colleagues. Thank you for the opportunity to speak today. My name is Stephen Thompson. I'm the Acting Assistant Deputy Minister of Treasury and Risk Management for the Department of Treasury Board and Finance. I am joined today by my colleague, Ms. Brittany Jones, who is our Director of Investment Strategy. We are pleased to be presenting the 24-25 third quarter results for the Alberta Heritage Savings Trust Fund. The third quarter results of the Heritage Fund demonstrate resilience and a relatively strong performance across multiple asset classes. As of December 31st, 2024, the total fair value of the Heritage Fund's investments stood at $25 billion, reflecting a strong fiscal year-to-date return of 9.0%. Overall, this represents an increase in net assets of $7.2 billion since March 31st, 2021. In the third quarter, $2 billion was also contributed to the fund as announced in Budget 2024. The addition of this contribution brings the total value of the fund to $27 billion at quarter end. Budget 2025 included the announcement of an additional Heritage Fund allocation of $1 billion to be made later this year when the province's cash results are finalized. The Heritage Fund's portfolio currently includes a 47% allocation to equities, which have achieved a 14.2% return year to date, led by strong performance in both foreign and Canadian equity. Fixed income and money market investments represent about 22% of the portfolio and have delivered stable returns of 5.5% fiscal year to date, while inflation-sensitive and alternative investments, comprising roughly 30% of the portfolio, have returned 4.0%, reflecting varied performance across real estate, private infrastructure, and renewable resources. Private infrastructure performed particularly well, returning 12.4% fiscal year to date, while real estate declined by 1.2%. It is worth noting that in the third quarter alone, the fund generated $726 million in net investment income, contributing to our strategy of retaining and reinvesting earnings to secure the fund's long-term growth. This brings total income generated fiscal year to date to $1.85 billion. Overall, the fund remains closely aligned with its 5-year real return target of inflation plus 4.5%, reflecting the effects of disciplined asset management, even amid market volatility. Turning briefly to matters of governance, the establishment of the Heritage Fund Opportunities Corporation last fall represented a significant milestone. While the corporation's board has not yet been announced, we do anticipate the completion of the appointments process in the very near future. However, until the board assumes full oversight responsibilities, the department remains committed to maintaining rigorous oversight of the fund and ensuring a smooth and flawless transition. Once that transition is complete, the department will continue to oversee asset manager performance on an ongoing basis. The new governance structure of the corporation provides for increased independence, with the board assuming responsibilities previously held solely by the minister. This will conclude my opening remarks. Thank you for your time, Mr. Chair. I would cede the floor to our colleagues at IMCO with your permission.
Thank you, Mr. Thompson, and good morning, all. It's a pleasure to be here. I'll start with providing just some brief organizational updates on AIMCO and then turn it over to my colleague Justin to describe the market positioning or outlook given the tumultuous events over the last few months. So firstly, post the changes in November last year on the executive team at AIMCO, I'm happy to report that 2 of the 3 positions have been filled. So the head of human resources is in place now, and likewise the chief legal officer. The third open position, the chief investment officer, so the search is commenced, and again, we expect to have that seat filled over the next few months. In the interim, the executive investment office, in which Justin as head of public markets, Peter Tetty as head of private markets, myself from a top-down perspective, and Ray Gilmore are part of the EIO, or the executive investment office. Outside of that, the business transformation that you've heard us speak about in the past, that initiative is on track and on budget. We still expect to have that delivered by end of the year. And that's an initiative that will fundamentally improve the technology or operating platform and give us a lot of scalability, better technology, better analytics, and sets up AIMCO well for the future over the next couple of years. And then thirdly, and not surprisingly, we've been spending a lot of time with our clients, including certainly our colleagues at the Treasury Board and Finance, given the tariffs from south of the border and the knock-on effects on all aspects of the portfolio. And again, in our responses to the questions, I'm sure we'll cover some of that ground. And finally, one of the things that we're always keen on, given there's a whole range of client interaction as well as internal activities that are going on, is to solicit feedback from clients in a structured manner to see how we are doing, things we're doing well, and things we can improve upon. And so the last set of client surveys we received was November, December of last year, and where we see an improving trend across multiple dimensions. We took a bit of a dip given all the changes that were announced, and clients were really keen that we move on to a more stable organization. And as I said, the hiring of the executives moves us in that direction. So with that, I'll conclude my prepared remarks and turn it over to my colleague, Justin.
Thank you, Mr. Prakash. I'm going to provide a brief summary of the quarterly report from a performance perspective. Mr. Thompson has covered some of this already, as well as provide a update from a calendar to date overview of performance, and then finally share some views on our current positioning within the portfolio. The Alberta Heritage Savings Trust Fund 2024-2025 third quarter report, as you know, encompasses the third quarter of the fiscal year that ended December 31st. The third quarter saw the fund outperform expectations with a return of 2.9%, 0.2% above the benchmark. The benchmark return for the quarter being 2.7%. As a result, the fund has generated $726 million in net income and was sized at approximately $25 billion as of the end of the quarter, the 31st. Also reiterating that the fund has generated a 9% fiscal return, or return fiscal year to date. And over the past 5 years, the fund's generated a return of 7%, which is 0.02% lower than the benchmark returns of 7.2. Starting off with calendar 2025 comments, this has certainly been a challenging environment for investors and financial risk markets in general. Risk assets are under pressure as global trade activity adjusts to changing policy and with respect to the tariffs and those related trade conditions. Investors are currently questioning the growth environment at a time when equity indices globally are relatively expensive. On top of which, inflationary impacts and the changing trade policy only add to further negative sentiment or the question of future direction of risk assets. Public equity markets are lower year to date, albeit off of the recent market lows, given the tariff pause announced by the U.S. government. The same can be said of global credit markets, as we've seen credit spreads widen over the course of 2025. Noting that we're still off of kind of the peak wides of the 2023 market, this is leading to additional economic uncertainty for investors, lenders, businesses alike. On the rates side, this has also been a fairly peculiar start to the year, as the bond market is incorporating many of these challenges as well, adding to that the potential sovereign investment flows as well as broader fixed income market delevering that we're seeing play out in the steepening of the yield curve. That said, the diversification benefits of a balanced portfolio like that of the fund that incorporates equities, fixed income assets, private or alternative asset classes is helping year to date, as the fund is currently off low single digits, approximately 2% year to date. Moving to a top of the house view, we do expect to be operating in a rather uncertain environment with an increased level of risk in the interim. We do not expect a central bank rescue or policy rescue to be a part of the short-term narrative here. And even if we think that a tariff pause or delay is positive, it can also be met with a muted response from investors. As mentioned, the risk landscape has really changed over the first few months of 2025. And until we see stability from a macroeconomic data perspective, from an earnings perspective, when talking about publicly traded companies in general, the broader risk environment should remain challenged. Currently, the portfolio is underweight public equities. That position is offset by a slight overweight in fixed income and cash, leading to a defensive position given the current risk environment. We're also very cognizant of the potential of any inflationary impacts from tariffs to impact our fixed income investments as well, or the rate sensitive investments as mentioned. While private markets are less impacted on a day-to-day basis, the same sentiment, growth, and valuation impacts will be felt over time, impacting deal flow, asset value in private equity, real estate, etc. We'd expect a little bit less sensitivity from our infrastructure or inflation-sensitive alternative assets, as just given the underlying nature of those holdings and the cash flow being less sensitive to or strongly linked to inflation as well. We're sticking to our process across the asset classes, managing risk and liquidity in a diversified portfolio, while looking for opportunities that these types of scenarios and these types of markets will bring about. Portfolio has ample risk budget as well as significant liquidity from our defensive positioning to take advantage of opportunities across our product suite. That'll conclude my opening remarks as well.
Thank you so much for that. With that, we will now turn to the question portion to our committee members. I shall open the floor if anyone has any questions. Mr. Kozowski, why don't you lead us off?
And thank you everybody for your reports and being here today. I think maybe I'll just start off with your oral reports, just returning to that. So Mr. Thompson, you mentioned the Opportunities Corporation, and then currently the department is in charge of it until you transition to an independent board. And so I guess I want to just get clarity here today. Will there be any investment decisions, or have there been any investment placements made by the department? Or will it all wait till an independent board is in place?
So under the current structure, the department doesn't make individual investment decisions other than with respect to asset allocation. So the statement of investment policies and goals is developed by the department based on the minister's risk tolerance. The asset mix, the asset allocation is decided within the department level with discussions with our colleagues at AIMCO. That function will transfer to the Heritage Fund Opportunities Corporation once it's fully established. The department expects, as shareholder of that corporation, to still have input into that process. So the minister's risk tolerances and preferences will still be considered by the corporation. But ultimately, the corporation will have final say as to the statement of investment policy goals, the asset allocation, and the oversight function with AIMCO. AIMCO will still have independence with respect to individual investment selection, and they will be still our asset manager.
Thank you. If I could just, do I get to give all, does anyone else have any questions? But I'll go ahead, Mr. Chair. Yeah.
Yeah, you can have a follow-up. Go ahead.
Well, it's not a follow-up. I have a new question.
Oh, forget it then. Mr. Red.
Well, thank you, Mr. Chair, and through you to our officials at the end of the table. I want to thank you all for taking the time to come join us today. And obviously, the Heritage Savings Trust Fund has been one of Alberta's biggest advantages to growing the future of this province. I do have some questions pertaining to the overall goals of the fund, specifically onto page 7 of the report. There's reference to the Heritage Savings Trust Fund Act, which highlights the goal to manage Alberta's non-renewable resource savings for optimal long-term financial returns. Now, I know due to recent announcements that the plan to grow this fund is at least $250 billion by 2050, ensuring long-term growth and financial stability for the province. I also understand that it's the intent to return back to the fund's original vision. And I think that's very important, especially in light of today's we'll say, turbulent headwinds that financial systems and programs such as this face in light of what's going on. But I think it's important that we refocus and reinvest on the reinvestment as well as the wealth sovereignty, strengthening governance, and promoting global partnerships by delivering high returns. Can you provide some more detailed overview of the intended vision of the fund and what specific factors that will help achieve these goals? And I have a follow-up after that. We'll go to that.
Certainly. Thank you, Mr. Chair, for the question. When we look at the fund as established by Peter Lougheed in 1976, there were elements that were lost over time, and that was primarily an intergenerational transfer of the resource wealth within the province to future generations. The growth in the fund was intended to provide another source of income at a time, ultimately, when non-renewable resource revenues are no longer available to the province. What we're seeing now with the creation of the Heritage Fund Opportunities Corporation and with recent changes to the Heritage Fund process related to income retention and things that we've seen in previous budgets, contributions made into the fund for the first time in many years, is a return to that goal of having a large enough investment portfolio available to future generations to replace at least some of the lost revenue when natural resources inevitably dry up. So that was the impetus in selecting a large number, the $250 billion in 2050. By 2050, that magnitude of an investment could allow for revenue generation of, depending on the dividend that the province of the day selected, up to $10-15 billion a year to replace depleted natural resource revenues. That had been lost over time. So up until recent years, all of the income generated by the Heritage Fund was transferred into general revenue and spent on initiatives that were top of mind for the province. It really just went into the budget to fund budget priorities. That was significant. There was 47 billion, I believe, was transferred to provincial revenues over the year, which meant that money did not have to be borrowed, did not have to be raised through taxes. But it also meant that the Heritage Fund did not grow over that time period. So we had a Heritage Fund that did not grow for decades until the changes were made first to, and this comes to the specifics that you're asking about in terms of how we're going to achieve those goals. The most significant change that was made was to allow the Heritage Fund to retain its income. The growth that we've seen since 2021 is almost exclusively by retained income. There is income generated by AIMCO, obviously, but the growth is from the retention of that and the compounding of that, and that's where we've seen $7.2 billion grow over a relatively short time, whereas for decades prior, we had seen no growth whatsoever in the Heritage Fund. The other avenue that's going to help us grow and hit our $250 billion target is new investment into the fund. So we've seen contributions through the past two budgets of $3 billion into the fund. So again, that increases the magnitude of the principal, allows for greater reinvestment of proceeds. And then the final sort of thrust of the redesign of the fund is the Heritage Fund Opportunities Corporation. So an independent body dedicated exclusively to the investment management of the Heritage Fund, to its growth, to it ultimately reaching its $250 billion mandate, rather than just as a portion of the department's responsibilities. So we'll have a dedicated board of professionals, international and Albertan. We will have dedicated investment staff, and we feel that the results that will produce will drive us towards our ultimate goal.
Thank you, Mr. Chair, and thank you to the folks at the end. They answered my follow-up question in that question, so I'll turn it back to the chair.
Fantastic. We shall next go to Mr. Kozowski.
Thanks, Chair. I just want to turn over to Mr. Lord. Was talking about central bank rescue. You don't expect any, and if you could just edify me, I have no idea what that would look like. What would central bank rescue look like? In just yeah.
Yeah, certainly. Thank you for the question. The market for, the equity market in particular, and investors for much of the last market cycle have relied upon liquidity or the expectation of any potential central bank activity to provide a bailout, so to speak, or what's known as a Fed put or a policy change to protect investors. I think that it's evident that the change in tone from the U.S. government currently with respect to tariffs and trade policy is creating an environment that's quite unpredictable in the short term from an investment perspective. The fixed income market right now is pricing at the front end of the curve some rate cuts in North America or globally as well. It just brings into question whether or not central banks are managing to certain targets with respect to inflation or employment. And I think that's a debate that will play out in the market over the coming quarters.
Thanks, Mr. Chair. And so then, just a curiosity, in terms of the Heritage Savings Trust Fund, I know I've heard that Warren Buffett has $300 billion in some sort of cash. So I have a two-parter. One part is, how much do you think right now we're sitting in cash as a percentage of our fund? And the other part is, what are the value of U.S. Treasury bonds that we might hold in the fund?
I'm happy to chime in on that. As mentioned, we're currently overweight at the total fund level, and the fund would be overweight cash and fixed income securities as a function of our defensive positioning and underweight equities. That number, as of most recently, and it is a fairly fluid number, is approximately half of a percent in cash, which would be a defensive positioning. I would have to follow up on the exact details of the U.S. Treasury holdings. There would be U.S. Treasury exposure at the fund level as a function of cash exposure, but also as a function of underlying collateral exposure for some of the equity derivatives, et cetera. That number at the AIMCO total fund level is approximately $1.2 to $1.3 billion as of last week, and depending on the underlying allocations of each client, they would have a pro rata share of those U.S. Treasuries.
Thanks very much.
Certainly.
Next, Mr. Wright.
Thank you, Mr. Chair, and through you to the officials at the end. It's really encouraging to see the fund's strong performance this last quarter. According to the report, as of December 31st, the fund achieved a 2.9% return, generating $726 million. Can you provide some additional details on the underlying drivers of this quarter's positive return? Are there particular asset classes or market trends that help generate these results? And then I do have a follow-up that I'll go to afterwards.
Yes, thank you. I'm happy to take that question as well. The 2.9% absolute return in the quarter net of all cost was certainly a welcome result, building on the strong 9-month fiscal performance for the fund. Notably, strong performance, positive performance came from our equity and infrastructure divisions. Within infrastructure and some of our illiquid asset classes, year-end adjustments to valuations of underlying portfolio holdings benefited the portfolio. Notable assets, flagship assets, such as Howard.
Forget it.
Okay. I'll continue. Such as Howard Midstream, Alberta's Can-Do Railway, and certainly our investment in and disposition of a data center asset known as AirTrunk benefited the portfolio. On the latter item, AirTrunk was a investment that was made in the infrastructure portfolio in 2020, where $400 million of client capital was committed to a Sydney, Australia-based data infrastructure business. This position was exited at over a 30% internal rate of return, generating $1 billion of proceeds in 2024, certainly helping the infrastructure portfolio. Within equities, more broadly, Canadian equities and foreign equities both generated positive rates of return in the quarter, 5.8% and 3.2% for foreign and Canadian equities respectively. There was certainly a very positive risk-on backdrop in the fourth quarter post the presidential election in the United States, following on back of very strong earnings and supportive macroeconomic data in general. Lastly, private equity within the equity asset classes as well generated strong performance from a total return perspective, 5.4% on the quarter. I will note that this did lag public markets or the public market benchmark as a whole, and where you would have seen a detraction from a relative return perspective. Strength in the quarter from internal asset selection and portfolio composition also contributed to generating the 20 basis points of outperformance.
Thank you for that answer, sir. And just my follow-up there. Do you believe that, or does AIMCO attribute the success to proactive portfolio management and assets allocation decisions, or is it reflective of a broader market movement? And then how can we also leverage this, ensuring that we get to $250 billion by 2050?
Certainly from a total portfolio perspective, the benefits of asset allocation are present in the return, the exposure to the various asset classes that outperformed. The performance above the benchmark of 20 beeps would be considered proactive portfolio management and based on the decisions that AIMCO would have made. Certainly that's more prevalent in public markets where you see these impacts versus their benchmarks on a day-to-day basis. With respect to the second part of the question, how we can continue to leverage the amount of this success in the future, we do remain steadfast in implementing investment strategy to generate both strong absolute returns as well as relative returns versus your benchmarks. This is measured over a market cycle more broadly. Certainly in close collaboration with our clients, we've been reviewing each of our product types, as Mr. Prakash has mentioned, over the past 3 years to ensure that the strategy is aligned with clients' needs. And maybe just, I'll end with noting, if we're taking a step back, over a 10-year period of time for the Heritage Fund, there has been a return generated of 7.9%, which is about approximately 0.6% ahead of its benchmark. Results speaking to the success of the process over a longer period of time, a full market cycle. Thank you.
Next, we have Mr. Ip.
Thank you, Mr. Chair. Mr. Lord, you mentioned that the challenges of market volatility because of what we're seeing south of the border. I'm just wondering if there are any sort of short-term plans, actions, or strategies in the works to safeguard against what we're seeing in the United States in the short term.
Yeah. Happy to expand upon that. And I'll go back to our defensive positioning. In the current environment with an elevated level of uncertainty, a defensive positioning in our lower than benchmark equity weight, higher than benchmark fixed income bond or cash weight is certainly one method. There are other strategies that the individual products will deploy to also protect against what would be an adverse scenario in risk markets, whether that is equity downside protection or whether that is a form of absolute return strategies that could benefit in those types of risk-off scenarios are all under consideration. We have exposure to a number of these types of strategies. Ultimately, what we're wanting to ensure as a long-term investor with a diversified, balanced portfolio is that we have the ability to take advantage of some of the opportunities that other investors wouldn't be able to take advantage of if they weren't in a situation where we had excess liquidity or the ability to commit capital and be counter-cyclical in a risk-off environment.
Mr. Chair, if I may add to that, please. Yeah, so in addition to some of the things that Mr. Lord described, many of the activities we engage in allow us to play that defense more effectively. So, for example, For each asset class, the investment team's working in conjunction with the risk team. We have good line of sight in terms of what part of the portfolio is likely to get impacted by tariffs, for example. So for example, in private equity portfolio that the Heritage Fund owns, for the most part, it is quite asset light. About 2/3 of it is based in the US, and therefore that gives you a bit of insight in terms of whether it gets impacted by not, by the changing policy. The second body of work that we've done and have been doing for a while is extensive scenario analysis, which allows us a 360 view and do what ifs on a tabletop to see how the portfolio may behave under different conditions. And one of the ones that we had done a few months ago was around tariffs, and we had a baseline scenario and a worst case scenario. Unfortunately, we ended on the worst case scenario, though the outcomes have been better relative to what we had planned for. However, it's early days and the policy keeps changing. And then finally, which also Mr. Lord mentioned, one of the things we are doubly, triply focused on, but certainly now and in general, is the liquidity management. So for example, the Heritage Fund liquidity level is about 2.5 times if the great financial crisis were to be hit again. So really, really well positioned. And finally, the other bits in terms of playing defense is looking at the counterparty risk such that we don't get surprised, as in the previous episodes, this has happened. And you combine all of this, if you will, the defense maneuvering with the offense where the good liquidity position allows you to take opportunities as there are market dislocations. Thank you.
Follow up, thank you.
All right. See no on government side, pardon me? Mr. Boychenko, do you have a question, sir?
Yes, I do. Good morning, everyone, again. I have a couple of general questions regarding benchmark. And specifically,
Thank you very much for the question. Setting the benchmark process it's a wonderful question, and thank you for asking. It's definitely something that's on our radar all of the time, and something that we work with AIMCO on. So the process essentially starts by setting an asset allocation, and each of those asset allocations are set by looking at what's the expected return and what's the expected volatility of each of these different components that we're going to put into the portfolio. And then what we do is look at the different benchmarks that can be associated with these. And so these benchmarks are really how we're going to assess the performance. We've talked a few times already this morning about what passive and active management looks like. So when we figure out what these assets we want in the portfolio are, we work with AIMCO on setting the different benchmark. The policy benchmark that you have alluded to, so that 13.7%, is essentially a weighted average of the different benchmarks of the different components in the portfolio. So that's why you're always going to see that policy benchmark moving, because what it is it's really a passive representation of what the portfolio looks like. Anything over and above that, so you see in this case, for example, the 2.9% over the 2.7% achieved quarter to date, that shows value from active management. So that there shows that AIMCO and their work on behalf of the Heritage Fund is adding value over and above that benchmark. That being said, benchmarks will always change over time. So one of the best examples that I can think of are in some of the private markets. In private markets, you've seen benchmarks evolve over time, and that's something that's continuously on our radar. So when we do our asset mix review, we choose the assets, we choose the benchmarks ahead of time. This is not something we're changing in the middle of the process. And then we work with AIMCO, and I will get AIMCO to just quickly touch on how they work with clients on a consistent basis to update those benchmarks within all the product descriptions as well.
Thank you, Ms. Jones. So I'll give two examples to help better understand the response to the question. So for public equity markets, so think Canadian equities, the TSX Composite is a well-known benchmark. It's on the evening news when markets go up or down, and so that's well understood. And those types of benchmarks are relatively straightforward in terms of clients using it. The second set of benchmarks associated with the private markets require a lot more analysis, lot more consultation with our clients. And so, for example, last year, in consultation with clients, we changed the private equity benchmark from a CPI plus or from an inflation-based benchmark to a market-based benchmark. So now it's based upon a global equity index with some excess return added on top of that. The thinking behind the choice of benchmarks is fundamentally consistent with what Ms. Jones said. Over the long term, these benchmarks should reflect the expected return risk liquidity characteristics that our clients are seeking from that asset class. And so from that perspective, those benchmarks may change from time to time, public markets less so, private markets, maybe every few years if the market evolves. And that's what you see reflected in the policy benchmarks for the Heritage Fund. Thank you.
Maybe a quick follow-up here, if I may. You have mentioned
Thank you. The volatility is not necessarily going to cause a reaction where we go and change the benchmark quickly, but what you will see is volatility in that policy benchmark number, especially in the shorter term.
okay. Inflations as well, just because looking at the
Yeah, I will.
It provides fairly steady returns, obviously, but I would like to explore some of the investments and their respective performance. First, I would like to understand more about the different property classes. Can the ministry provide a breakdown of commercial, land, industrial, and residential properties? What is your breakdown of that? Because I see that real estate has had some negative returns, and could the ministry provide some details on the surrounding factors that have caused this? So maybe breakdown and then specifically on the real estate.
Yes, thank you for the question. I'll answer the first item with respect to the overall summary or a recap of the exposures of the inflation-sensitive alternatives allocation at 30.3% for the Heritage Fund. Within this, real estate comprises 16.7% of which 10.7 is Canadian and 6% is foreign real estate. 11.2% of the allocation is associated with our infrastructure portfolio, and renewable resources would make up 2.4% of the exposure. Now, as it relates to the categories with respect to commercial, land, industrial, residential, I'm going to speak a little bit to the real estate program overall, and this would be just comprised of direct real estate holdings across the broader real estate product, approximately 30% industrial exposure, approximately 30% residential exposure, and 20% office and 20% retail. As mentioned, that is of the directly held allocations. There would be, those numbers from a total real estate portfolio perspective would be slightly less, accounting for alternatives, fund allocations, and a small amount of public equity exposure in the real estate holdings as well. The second part of the question, I believe, was referring to some of the negative returns from the real estate portfolio and what's driving that, what some of those factors are. Certainly real estate, pardon me, real estate did have a challenging quarter and year, as you'll see in the report, with the quarterly performance at minus 1.5%. There have been large subsections of the real estate market, both domestically and internationally, that have been under pressure for quite some period of time. Best examples of the real estate assets that have been underperforming would be associated with office properties and some forms of non-prime or B or C class shopping mall properties. On the office front, certainly there has been an oversupplied market in a number of domestic and international markets as of late. That has led to significant valuation decreases for those buildings. We would see this more pronounced in our B or C class office buildings with lower amenities, tend to be older construction, and less modern features overall. Class A office, these would be flagship buildings, have held up quite well in large urban areas in North America. On the enclosed shopping mall comment, certainly in the news as of late with the recent announcement from Hudson's Bay Company, this has provided another headwind for the sector overall. Very high quality shopping malls in densely populated urban areas have continued to perform quite well as they attract tenants and shoppers as they have been. Where you're seeing these malls on the periphery struggling with higher vacancy, that'll lead to obviously falling rents, a loss of tenants and or anchor tenants, flagship tenants like Hudson's Bay would compound that. We do believe that the Canadian real estate market is showing signs of stabilization through 2024 and into 2025, and our outlook is that it will continue to improve throughout the year. We did see valuations start to turn positive in some areas at the end of 2024, which is encouraging after a number of difficult years. We do expect some pressure in certain foreign real estate markets to continue. Most of that would be focused around office holdings in general. With that said, it's not all negative. The real estate investment team at IMCO is finding attractive opportunities on behalf of the fund and clients across our key sectors of industrial, residential, multifamily, and grocery anchored retail properties, where we are able to generate compelling rates of return and put additional capital to work and meet our long-term goals of the fund overall. Thank you.
Yeah, I don't see how much time we still have left there, but if I have.
No. Mr. Kozowski.
Thanks, Chair. So I just want to return to our mission, just stay focused on that, and that is to be good stewards of non-renewable resource revenue. So as AIMCO's been pointing out, and we're all quite aware, we're in a volatile situation. The price of oil looked like it was at just below, a hair below $62 right now, but we know that could change before the end of the meeting. So budgeting for $68 with our budget, which would have been a deficit budget, what is our prospects of being able to contribute to the Heritage Savings Trust Fund after this fiscal year if we stay in this low oil situation, low priced oil situation?
Well, that speaks to the broader fiscal policy decisions of government. Pardon me. The allocation of funds into the Heritage Fund is now laid out in the Sustainable Fiscal Planning and Reporting Act, which governs among other things, the allocation of surplus cash. So there are 4 elements to the act. It requires balanced budget with certain exceptions, such as the situation we find ourselves in now. Limits year-over-year expenditure growth to population plus inflation. Limits in-year expenditure growth to a voted contingency. And then sets out the policies for allocation of surplus cash, which currently sit at the first 50% of any surplus cash is to be allocated either to the repayment of maturing debt or contributions into the Heritage Fund. The remaining 50% may be allocated in the same way or may be used by government for one-time initiatives that do not result in ongoing expenditure obligations. Third option has not been used to date under the Act. For the last 2 budgets, we have seen $2 billion and then $1 billion contributed into the Heritage Fund. As you know, from Budget 25, we see the province in a deficit position for the next 3 years, which implies explicitly really, that there will be no surplus cash available for allocation into the fund. The Act does require that the budget be returned to balance within 3 years, so presumably in Budget 2026, we will see a path back to balance. Whether that includes a surplus will obviously depend on our fiscal fortunes. And as you say, right now, the pressure is downward on revenues, particularly with respect to natural resource revenue, but also in anticipation of the impacts of the tariff and global trade situation on the overall economic situation of the province.
I will give opposition side another opportunity at round of questions. Sorry, did you have a follow-up, Mr. Kozlowski?
Yeah, I have no follow-up, but I have many more questions.
That's fine. Let's go to Mr. Ip here, please.
I'm just going to switch gears a little bit. I'm curious, when making investment decisions, are there ethical or sustainability guidelines when making those determinations to ensure that we're not inadvertently investing with a non-friendly state actor somewhere overseas, etc.?
Yes, so we have responsible investing guidelines that we share with the clients. We've had that for many years now. And focus of that, inherent key principle of that, is how we invest both in Canada and across the globe. We adhere to certainly any of the international restrictions, Canadian restrictions, provincial restrictions, if there are, consistent with the laws and regulations. And likewise, if there are specific asks from the clients, that also governs how we invest on behalf of our clients.
Thank you.
No follow-up.
No follow-up. Thank you very much. All right, next we'll go to Mr. Stefan. And just a reminder, everyone online here and in the room, I'll allow a primary question followed by a follow-up if it's related. All right? Thank you.
Well, that is most excellent. first question.
I'll start. Thank you for the question. There's a few in there. First, I want to just make a note. Sometimes we mention this in our opening remarks, but we didn't today. But there are two different types of benchmarks that the Heritage Fund uses. One is a real return benchmark. So that's the CPI plus 450 that we're looking at. And that one there is meant to be measured over a 5-year basis. And this is supposed to tell us if our asset allocation is achieving what we expected from it. So just a little bit of history on that. The CPI plus 450 5-year rolling target was set in 2011. And this was set when the portfolio was expected to be generating some type of fixed income returns to be able to pay back to the budget. When it comes to some of the other elements that you were talking about, so some of the volatility that we're experiencing, active versus passive management, there's lots of inherent trade-offs with these types of things. As we see more active managed portfolios, there's definitely more costs that are associated with that, but there's also expected performance benefits that can come from that as well. Then when we're looking at more passive investments, certainly, as you've said, passive investments can be certainly cheaper, but on the other, so the very, a certain sense of alpha certainly is lower costs. However, on the other side, you may experience more volatility with those. So this is an active portfolio construction conversation that will continue to happen regarding the Heritage Fund, but it will be up to the HFOC board at the end of the day to approve an investment policy that would modify the existing Heritage Fund benchmarks such as this one.
I think, Mr. Chair, could we add to that, please?
Yes, please.
So let me start with the active versus passive. This debate's been going on in the industry for 20 plus years. I had more hair then when I first engaged in that debate. And the first thing we'd start with is it's not an either or question. So Justin will share with us, we do use index solutions as well, where appropriate. So that's number one. Number two, big part of the portfolio, or when we normally think about passive, you mentioned exchange traded funds, etc. So that typically, it touches the public markets, typically public equities, where you can buy relatively inexpensive exchange traded funds. But even if you get to the fixed income ones, very quickly they are a lot more expensive than what it costs AIMCO to manage them. The high yield ETFs, for example, typically tend to be about 50 basis points. So that's number two. And number three, there is a fair bit of benefit from having public equities within the portfolio, the way we implement on your behalf. Amongst other things, it's a very, very attractive source of liquidity as well as return generation, in addition to providing market exposure. So that's sort of the more the 5,000 feet view response. And Justin, if you would add to that,
certainly.
please.
Thank you. The use of index strategies or passive strategies is prevalent across the equity platform, in particular at AIMCO. We do have passive product offerings on the platform for client allocation as well. I will note this becomes a total portfolio risk discussion as well at the asset class level. When allocating to a passive strategy, you're essentially determining your security selection or your individual weightings as a function of the constituents or the methodology of that underlying index. Interesting or relevant commentary right now, as we've been talking to clients frequently over the last number of years about the concentration of the U.S. equity benchmark, either MSCI US or the S&P 500, given its concentration in the what is known as the Magnificent Seven or large cap technology and consumer names, the concentration of which is a function of obviously the outperformance of those names as well. We're seeing some of those impacts impair the returns of U.S. equity indices currently as valuations compress and investors look to raise capital. From AIMCO's perspective, we have the ability to generate passive returns via a number of different tools. That would be using the S&P 500 as an example, either ETFs or derivatives. The latter usually being favored given it preserves some of the structural competitive advantage for our clients of preserving liquidity and allowing for excess return to be generated using a number of different strategies as opposed to individual stock selection or relying solely upon individual stock selection versus a benchmark. But very valid question and commentary, certainly a debate that will continue to carry on in the market.
I have a supplemental kind of connected question, if that's okay, Chair.
Go ahead.
Yeah, so on page 10 of the report, and again, this kind of goes
Great question. So let me start with with some quick definitions and then respond to your question directly. So firstly, level 1 holdings are where you directly own shares. So, you hold 1,000 shares of Royal Bank, for example. The second, level 2, is if you held exactly the same shares, but you held it through a fund structure. So like an ETF that you mentioned in first part of the question, or a mutual fund, or any type of commingled vehicle or pool vehicle. And so exact same investment, just the vehicle by which you own is different. And so the level 2 that you see on page 10 effectively just reflects the fact that our clients, including the Heritage Fund, invest through pooled vehicles where not only the Heritage Funds owns that pool, but it is also owned by the other clients of AIMCO. So the exact same exposure, but simply the fact that since multiple clients invest in that vehicle, there is a structure around it which allows multiple investors accessing the same investments. So that's the level 2, and I'd suggest, without taking a very close look at the Norges Bank portfolio, but the way NBIM manages it, because there's only one client, there isn't really a need to have a pool structure because you have only one client. As soon as you go from one client to more than one, you need a pooled vehicle, and which is what AIMCO utilizes. This is consistent in the industry, whether it's BlackRock commercial managers such as that, or other peers in Canada, such as the British Columbia, analog to AIMCO, or the one in Quebec. And so that's how the level 1 and level 2 holdings are reflected on page 10. Hope that answers your question.
Thank you for that.
Could you speak to level 3?
Yes. So level 3 investments are the private market type investments for which typically you need other methods of valuation in addition, separate from the public markets, where you can simply go to the stock exchange or to the dealers and get valuation. So the pricing of illiquids such as a real estate building or a infrastructure or a public or a pipeline, etc., those all sit within the level 3 bucket. And given the portfolio allocation that Heritage has to those types of asset classes, that is reflected in the level 3 securities within the portfolio.
All right, next we'll go to Mr. Kozowski.
Thanks, Mr. Chair. Just want to go look at, since like the mass firing of the board at AIMCO, we've now got 5 board members, and I think there's usually room for 10, so I would like to get an update on where we're at with replacing board members. And then just inside that, with that 5, who are currently the board members that sit on the investment subcommittee?
With respect to the entire committee, the maximum is actually 11. You're correct, there are currently 5. We are in the process of reviewing several candidates to be included, I would say, in the near term to the board. We're going through, there is a process set up with an AIMCO nominating committee reviewed by the ministry, reviewed and approved by the minister. So those appointments are in process. I believe it's in the 3 to 4 candidate range. I'm not sure that we're getting directly to 11, but that's sketchy information. I'm not 100% sure on that. Just don't want to lead anybody down a path on how many people we're looking at. But there is certainly the desire to fully staff that board, but appropriately and with qualified personnel. With respect to the investment committee, I don't think I have that information. Do my colleagues at AIMCO, would you know?
We can do that
We
as a
can
follow-up
come back with that.
with the
Happy to
different committees in place and who the members are and who are chairing those committees.
But I would say with a board of 5, the investment committee is likely most of those 5.
Okay, and just to follow up, Mr. Chair? Go ahead. Yeah, so the firing was the reason for it was cost savings, and so I guess I have questions for Mr. Lamb. Is the Auditor General investigating or reviewing that event and the changes that have happened to the AIMCO board since?
I have no comment on whether we're doing any type of investigation at AIMCO right now.
Okay.
Mr. Wade. Thank you, Chair. And thank you to AIMCO for being here. If we look at the asset classes on page 2 of the report, I'm seeing that 30.5% of the portfolio is allocated towards foreign equity and 7.9% is allocated towards Canadian equity. International investments have become a major topic of conversation lately, especially with the consistent changes to the trade with global partners. And you may have touched on this already, but I'm just wondering if the ministry can provide some additional insights of the safeguards that exist in the fund and given the uncertainty of the global markets.
Thank you for the question. I'm happy to provide some commentary, but I will ask our colleagues to weigh in from Treasury Board Finance as well if they'd like. And not to be repetitive, but some of this does fall back onto overall portfolio diversification as a whole. From a portfolio construction standpoint, we typically see clients allocate across our equity platform that would be Canadian equities, global equities, some emerging market or small cap equity products as well. In general, there tends to be a larger allocation to global equities and a smaller piece to Canadian equities. This reasoning can be thought of as kind of twofold. It's a function of the opportunity set, and I've mentioned the diversification. From a perspective of the opportunity set, the Canadian equity market is quite small compared to global equity market cap. Canada represents approximately 2% of global equity market capitalization. Certainly, number of companies is lower, size of companies is smaller, et cetera. When talking about the opportunity set as well, the Canadian market tends to be concentrated in financial companies, in a number of energy materials companies as well, and you see the overall concentration much different than global equity markets. Same can be said for global markets as well, with differing concentrations across information technology, communications, et cetera. The Canadian market doesn't necessarily have the same type of exposure to some of the sectors that have been generating fairly consistent earnings growth as of late, technology, telecom, media, healthcare as well, and the portfolio benefits from this diversified approach to equity allocations overall. I think that about summarizes. Is there any part of the question that I can recap?
No, that's good. Thank you. Thank you.
Give the final question here today to Mr. Ip.
Thank you, Mr. Chair. My final question for today anyways, really pertains to the interplay between the Heritage Fund Opportunities Corporation and and AIMCO. So broadly speaking, I understand that the HFOC is to direct policy for the Heritage Savings Trust Fund, but the investments will still be managed by AIMCO, sort of broadly, that's the structure. But it seems like from a governance perspective that there may be some overlap or some duplication. So I'm wondering if the members here could explain the delineation of the governance roles between this newly created corporation, between HFOC and AIMCO, and what it ultimately looks like, why it's necessary. I think it's a bit of a conundrum for the outside observer.
No, it's a great question, and as we step up the HFOC, it will hopefully become more obvious what the roles are meant to be. I think the most basic way to think of it is to look at the rest of AIMCO's clients. All of the pensions, even the Ministry Trustee MAP, for example, have either a corporation or a separate board responsible for the oversight of the investment policies and goals, the asset allocation, and the day-to-day interactions with AIMCO as the investment manager. So AIMCO's role as investment manager will remain unchanged for the legacy assets that sit within the Heritage Fund. Within the Heritage Fund Opportunities Corporation, though, there will be the opportunity for direct investment by that corporation in very specific investment vehicles. We'll have more information about what those look like as the fund or as the corporation is properly stood up and as those funds are deployed. As you know, or as we've said earlier, $2 billion has been directed into the fund from Budget 24, and another million or so will be directed from Budget 25. That cash has not yet been deployed. So the cash, as it's deployed, some of it will be deployed into legacy AIMCO portfolios, and some of it will be deployed directly by HFOC itself. Again, this would be in private illiquid space likely, but again, we'll have more details as to the specifics of the investment policy once the corporation is fully operational.
Follow-up, Mr. Chair, is how will HFOC report back to perhaps this committee or ultimately be accountable to public members of the selected body?
That's a great question. The intention is that HFOC will sit at this table to speak to the Heritage Fund results as a corporation responsible for the investment policies and goals and oversight of AIMCO's activities. AIMCO will remain at the table, And the department will also remain at the table to speak to the Heritage Fund as a shareholder asset owner.
I see no other questions, so this concludes our discussion of the report. Thank you to our guests from Treasury Board and Finance and AIMCO for being here today. You're welcome to leave the meeting now or remain if you so wish. Thank you all again for your hard work. I shall now look for a member to move a motion to receive the fund's 2024-2025 third quarter report as distributed. Mr. Kozowski moves that moved by Mr. Kozowski that the Standing Committee on the Alberta Heritage Savings Trust Fund received the Alberta Heritage Savings Trust Fund 2024-25 third quarter report as distributed. Any discussion on this motion? With that, can I get all in favor of, please say aye. Anyone opposed? Online? Anyone opposed? Fantastic. That motion is carried. Next, honorable members, Section 6.4C of the Alberta Heritage Savings Trust Fund Act requires a committee to report to the Legislative Assembly on whether the mission of the Heritage Fund is being fulfilled. The last report to the Assembly was tabled in April 2024, which covered the activities of the committee for the 2023-24 fiscal year. A draft of the 2024-25 report was posted to the committee's internal website for members to review. Do members have any questions or comments regarding the draft report of the committee? It certainly is. I shall now look for a member to move a motion to approve the draft report. Mr. Weeb moves that the Standing Committee on the Alberta Heritage Savings Trust Fund approve the draft annual report of the committee's activities during 2024-25 as distributed. Any discussion on this motion? With that, all in favor of, please say aye. And on the phones, all in favor, please say aye.
Aye.
Yeah, good enough. Anyone opposed? No, that motion is carried. This report will be tabled in the Assembly at the earliest opportunity, possibly as early as today. With that, under Section 6.4D of the Alberta Heritage Savings Trust Fund Act, the committee is required to hold an annual public meeting to inform Albertans about the status of the fund. This meeting has traditionally been held in October before the start of the fall sitting of the Assembly. Following this practice, we would be looking at an evening meeting in October. However, we can decide on a specific date and time at our next committee meeting, which will take place in June when we review the Heritage Fund's annual report. This meeting has been held in the committee rooms here on the second floor of the Queen Elizabeth II building since 2015. These rooms have all the technical requirements and support to host and broadcast a meeting with ample ability to accommodate any members of the public who attend. The committee could choose to hold the meeting off-site, but the best option is likely to continue to use these committee rooms. I will open the floor to any comments on this. Perfect. I like it. We should also discuss the format for the meeting. The last public meeting of the committee was held on November 6, 2024. Members of the public were able to ask questions in person, by phone, email, social media, and a web form on the committee's website. These methods have been used in the past for the past several public meetings and have been successful in encouraging public participation. I'd suggest that the committee continue to use these methods to allow the public to engage and ask questions of the committee. I shall now open the floor to discussion on the format of the meeting and any suggestions on what members would like to do differently. Perfect. If there are no other comments, then we will begin the planning process for this year's public meeting. Next, the communications plan. In years past, the committee has directed LAO Communication Services to prepare a communications plan in support of the public meeting. We have Christina Steenbergen from LAO Communication Services joining us today, and I'd ask her to give us an overview of what the plan might typically entail.
Thank you, Mr. Chair. So when we do our communication planning in the past for this particular committee, we've kept it at about a $40,000 budget, but we do have low cost, medium cost, and very high cost options. I would recommend keeping it pretty in line with last year and doing a little bit more focus on digital advertising. We are doing some out-of-the-box is advertising this spring with different campaigns, so I'm hoping by June we'll have a better idea of what that could look like. But again, last time we did billboards and print advertising and a lot of digital social media advertising as well.
Fantastic. Any questions for Ms. Steenbergen? Mr. Kozowski?
Thanks, Mr. Chair. I'm just, using this platform and thinking about digital advertising. And so what I'm hoping we can maybe talk about, Mr. Chair, is that when I look at like the political landscape of the world and someone like Elon Musk that's made comments about Canada not being a real country, whether I think it's appropriate for us to be using even our little bit of money that we're spending on digital advertising towards the platforms that he owns. And is it possible that in a communication plan going forward, we could avoid spending any money on probably that specific platform that Elon Musk owns?
I'll open that up for discussion. Mr. Weed?
Yeah, I don't see no reason to change any of the advertising just because the platform, it's not personal. It's a platform that we could use to get our message out. So I think it's perfectly fine.
Perhaps Ms. Steenbergen, is there a cost associated with using any of these platforms?
Sure, yeah, thank you, Mr. Chair. I don't want to speak out of turn, but the LEO does have an X account that we do, there is a subscription fee to it, but we use it. You have to pay for the subscription to be able to advertise with X, so it's already paid for in that sense. The cost with the X advertising is pretty minimal, and it's actually, for politics, it's probably one of the best mediums in terms of the audience that would be interested in this particular meeting. While I understand your concerns, I do think it would be a lost opportunity to not use X, but that said, we can also look at the different platforms and move the money around.
Mr. Stefan?
Sure. To me, the paramount
Go ahead, Mr. Kozowski.
Thank you, Chair. And not saying drop the account. I'm specifically talking about paid advertisement. If it's posting, and we're already posting, I'm not suggesting any change to that. I'm just saying if it's something like Facebook where you pay to boost a post or you pay to get the advertisements into circulation, I just think there's a lot of platforms out there. There's probably a dozen digital media platforms out there. And the one that Elon Musk owns isn't one that I think we need to pay extra money to right now.
Yeah, sorry, Mr. Chair. I can definitely take that into account, and when we put together the plan, I will look back at last year's campaign and see, and actually the year before, because the year before we didn't actually pay for the subscription. So I can look at the numbers and see kind of what the benefits are, and I will include that in the plan for the presentation in June, if that works for you. For you?
Fantastic. If there are no more questions, then I'd like to thank Ms. Steenbergen for her participation today. And I'll look to a member to move a motion to direct the LAO to prepare a draft communications plan for our review at the next meeting. Mr. Ip moves that the Standing Committee on the Alberta Heritage Savings Trust Fund direct the Legislative Assembly Office to prepare a draft communications plan in support of the 2025 public meeting for review at an upcoming meeting of the committee. Any discussion on this motion? All in favor in the room, please say aye. Anyone in the room oppose? On the phones? Can I get a? Yes, perfect. Thank you so much for that. That motion is carried. Are there any other issues for discussion today? I see none. The next meeting will occur in June after the release of the fund's annual report. Please stay tuned for that final date to be announced. And if there's nothing else for consideration today, I'll call for a motion to adjourn. Mr. Rosewell would like to move that the April 14th, 2025 meeting of the Standing Committee on the Heritage Savings Trust Fund Committee be adjourned. All in favor, please say aye. Aye. On the phones? Fantastic. Anyone opposed? Perfect. That motion is carried. This meeting is adjourned. Thank you so much.
Good job. Your timing was perfect.
Great. We have to hustle through.